Good morning, listeners, and welcome to the Trade Talk podcast. Finally, the Nifty broke the boring trading range at 17,450 and managed to close at the highest point of the day. Support has moved from 17,250-300 to 17,400-450 levels. Broad-based activity helped the market to close above the psychological resistance of 17,500. The next level to watch out for would be 17,600, and in the best case scenario it would be 17,700. However, on the day of the weekly expiry, the level of 17,600 would act as the main hurdle, and a decisive break of 17,600 would invite furthermore short covering. Buying between 17,450-17,400 level is advised. However, for that we need to keep a final stop loss at 17,350 levels. The Bank Nifty has reached last week's high. However, the dismissal of 37,050 will invite furthermore short covering. Resistance would be 37,050, 37,250 and 37,450 levels. The focus should be on auto, bank, financials and metal companies. Our preferred picks are Bajaj Auto, TVS Motors, Tata Motors, Bharat Forge based on their technical formations. From the financials and private bank space, we like ICICI Bank, Canara Bank, Bajaj Finance and Jindal Steel and Power, JSW Steel, Tata Steel should do well. Apart from that, if we go through with FIS figure on which we were discussing in last 4-5 days that they were reducing their long positions, but yesterday finally we saw some more addition on the long side. They have increased their long position on call options heavily. They have reduced their positions on the put options, which is clearly a signal of furthermore bullishness, and they have also increased little bit on the index futures. So broadly, FIs have created long positions just before the day of weekly expiry, which is positive. In the cash segment, FIs infused nearly 230 crores, while domestic institutions are selling to the same. Globally, if we see the markets, then US futures were little changed after S&P 500 posted the biggest jump since August, avoiding a break of its 50-day moving average. The dollar remained lower and 10-year yield was around 1.29 levels. Oil rallied to the levels of 75 plus. US report showing a bigger than expected decline in crude stockpiles, signaling a tightening market, and that's the reason we saw some more activity or bullish activity on the crude side. Broadly, the markets are still in the grip of bulls and finding support at important support areas. We need to see that how actually market span out on the day of weekly expiry, and we need some more buying attraction in financials. Friends, that's all from my side. With this, I am ending today's call. Thank you very much for listening in and have a great day to all of you.